Bitcoin, a large driver of the price is the printing of dollars when you're pricing it in dollars. But I think we could hit $1 million per Bitcoin. I feel super confident in 250,000 at least in this cycle. And I do think it'll land somewhere. The high will land somewhere in that range. Listen, with the ETFs, banks are now making money. They're monetizing this thing. Think about the deals banks were getting before. They have to sell and buy bonds, which are now getting, for the first time, absolutely destroyed. What an awful deal to summon deposits from the general populace, shovel them into bonds that get absolutely destroyed. And the rest of the general public is now running to the exit door of this Bitcoin thing. And they weren't getting any part of that business. They weren't getting any part of that deal. So of course, like, tell those people, stop buying Bitcoin, screw that asset class. They can't run to the exit doors without us. We're not monetizing that. We're not part of this industry. Fuck these people. Tell them to shut it down. Now, all of a sudden, they are part of it.
Jack Mallers begins his discussion by addressing the potential future value of Bitcoin. He estimates that Bitcoin could reach anywhere between $250,000 to $1 million. This broad range, he explains, is influenced by the difficulty in pricing the hardest money ever using rapidly debasing fiat currencies. Mallers highlights that a significant driver of Bitcoin's price is the ongoing printing of dollars. As central banks continue to devalue fiat currencies through excessive money printing, the value of Bitcoin, which is priced in dollars, is likely to increase. Mallers emphasizes the importance of Bitcoin's halving cycles. He views these events as inventory reductions, a concept familiar to those from Chicago's Midwestern mindset. By reducing the inventory of available Bitcoin, these halvings push the market closer to price discovery. This period of price discovery is crucial for Bitcoin as it adjusts to a lower supply. However, Mallers believes the more significant catalyst for Bitcoin's price surge is the state of the sovereign debt market. Central banks have historically intervened in various markets, such as real estate, to stabilize them. Now, they are faced with the challenge of managing the sovereign debt market, which requires an unprecedented level of money printing to prevent a collapse. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I'm on record. I think we're somewhere between 250,000 to $1 million, which is a wide range, but we're being asked to price the hardest money ever in this piece of paper that they're rapidly debasing. So it's kind of up to their debasement. I think, Bitcoin, a large driver of the price is the printing of dollars when you're pricing it in dollars. But I think we could hit $1 million per Bitcoin. I feel super confident in 250,000 at least in this cycle. And I do think it'll land somewhere. The high will land somewhere in that range. I am a believer of the halving cycles. I think of the halving as an inventory reduction, which is a very Chicago Midwestern way to think of it, as opposed to it's priced in, it's not priced in. It's like the 88 drought, like the corn inventory was reduced drastically. So the inventory on the shelves are reduced. So you're that much closer to reaching price discovery. That's how I think of it. So I do think that halving induces like a price discovery period for Bitcoin because the inventory reduction. But I think the bigger catalyst is the sovereign debt market, is the fact that for the first time ever, central banks price fix everything, right? Like that's theoretically their job. They tell society that the world is better off when we fix the prices for things instead of the free market. And they've gone through each crisis and price fix different things like real estate, right? And now we're at like one of the final bosses, which is like the sovereign debt market, the bond market. And so the level of money printing to bail this thing out is going to be immense. And that's what I think is the main story, albeit at times with a halving and at times with a presidential election. All that stuff is fuel to the fire. But if they're going to save this thing, like we saw this like yen dollar swap line, like risk is fully institutionalized. When people say, we could have a recession. No, we can't. The S&P 500 is, the government relies on the S&P 500 for the people's wealth to be like, all of the wealth is in the S&P 500. It's in real estate. They can't afford for these things to fail and to go down. They can't afford for the yen to go down because Japan's going to sell treasuries. So I think risk is fully institutionalized. They have to prop this thing up. And this time, what they're propping up is the biggest financial market in the world, which is the bond market. And so that level of money printing from central banks, we've never lived through anything like that. So I think $1 million Bitcoin is reasonable. It's not impossible. Yeah, the cosign that Wall Street likes Bitcoin. Listen, gold, as we're talking about, this defunct metal, is up in the face of a hawkish Fed. That is very, very telling. The world is really concerned around the purchasing power of the dollar. They don't think that the central bank and the treasury is going to protect the dollar whatsoever. They think there's going to be a lot of printing. And Wall Street says, give me one of those ETFs. I mean, the poor Winklevoss have been trying to get fucking ETF
years.
For forever. And then
decade.
Now Fink comes along and says, I need one of these and I need it now, because I think it's the best expression of currency debasement. And so I think it's a massive cosign. It's a huge deal. The timing makes all the sense in the world and kind of validates everything we've been saying. Like, this level of government spending isn't sustainable. These guys aren't going to try and protect the purchasing power of the currency. They're going to have to print their way out. Hard assets are going to be the winner. What's the hardest asset? So I think all of that's good. And it's actually probably one of the bigger, victories of Bitcoin's life, to be honest. And they can't, the point of proof of work and the way Satoshi designed it is they have no influence on the system. It doesn't matter how many coins they have. Bitcoin is protected by power, by electricity. And so the analogy I drew, this is a wild analogy, but the analogy I drew in my keynote in Prague is Hitler. Hitler tried to 51% attack planet Earth. So that is a malicious actor that tried to control the surface area of planet Earth, and planet Earth was able to defend itself because all the honest humans, all the honest actors in the system could summon enough physical power to protect the surface area of planet Earth and outnumber, through physical power, Hitler, right? So Hitler tried and failed a 51% attack of humanity. Now, it's the same in Bitcoin. If any single actor tries to attack Bitcoin, it's not who has more coins, it's who has more power, which is what makes Bitcoin secure, and what is why proof of work is the innovation, is that even if I have 0 Bitcoin or 1 million Bitcoin, I have unbounded ability to summon power and go get watts and electricity to defend this thing. So there's never been an outside single party threat to Bitcoin. And if anyone does try and attack us, then the honest actors in the system will all go summon enough power to defend the network. So I don't know, kudos to Satoshi for the invention. And I think it's an amazing thing that Wall Street is under the same impressions that we all are.
He critiques gold for its inflationary nature, with an annual supply increase that dilutes its value over time. Bitcoin, with its fixed supply and 0 inflation rate, offers a much more robust store of value. Mahlers argues that over a lifetime, storing wealth in gold results in significant loss due to its inflation rate, whereas Bitcoin's deflationary model preserves wealth more effectively. The discussion then shifts to the financial industry's changing dynamics. Banks, which have traditionally made money through bonds, are now seeing those investments perform poorly. As a result, they are increasingly turning to Bitcoin and other cryptocurrencies as new revenue streams. The introduction of Bitcoin ETF has provided banks with a way to monetize the growing interest in digital assets, marking a significant shift in the financial landscape.
I think Bitcoin cycled through so many narratives. It's the first perfect money that we've ever designed. It's actually the first money that we've built from scratch with our hands. Like, if you look historically at monetary assets like gold, we didn't create gold, we found gold. Bitcoin we created. So I think it's going to take time for, I wonder, I wasn't alive for this, but I wonder the iterations of narratives that the internet went through. Right. But no, I don't think, gold unfortunately concentrates. That's its biggest issue, is the reason that it was able to be attacked and we left the gold standard is because it concentrates in the governments and central banks own all the gold and have all the gold. So I think it's a defunct metal. I think it's a bad comparison. I think Bitcoin is 1,000 times better. And yeah, I don't own any gold, and I wouldn't own any gold. And the one thesis is that, when central banks do need to devalue their currency officially, they'll probably do it against gold. So you might want to own the thing that central banks are going to devalue against. But it's just so hard. I mean, dude, listen, like at best, gold has 2% inflation rate, where probably with more demand, that rate of production will go up. With more demand, there's more supply and everything but Bitcoin. But let's say 2% inflation rate, like over 100 years, you're losing over half your wealth. Over a lifetime, you're losing a substantial amount of your wealth in gold. How much better is an asset with 0% inflation rate? Like a million times better. Like, what's the lifespan of Bitcoin if it has 0% inflation rate? Like a billion years, or technically infinity. Gold, 2% inflation rate, half my money's gone before I die if I store my wealth there for a lifetime. So I just don't think it's close. Listen, with the ETFs, banks are now making money. They're monetizing this thing. Think about the deals banks were getting before. They have to sell and buy bonds, which are now getting, for the first time, absolutely destroyed. What an awful deal to summon deposits from the general populace, shovel them into bonds that get absolutely destroyed. And the rest of the general public is now running to the exit door of this Bitcoin thing. And they weren't getting any part of that business. They weren't getting any part of that deal. So of course, tell those people, stop buying Bitcoin, screw that asset class. They can't run to the exit doors without us. We're not monetizing that. We're not part of this industry. Fuck these people. Tell them to shut it down. Now, all of a sudden, they are part of it. The ETFs, this is the most successful ETF ever launched. Banks are making money. They're monetizing this. And so I think that is a huge part of why this is changing. Instead of saying shut it down, they're saying, hey, how many pieces of shit can we approve? Hey, put an Ethereum ETF, Solana ETF, Dogecoin ETF. These people want this stuff and we can monetize it. It's a way better business than buying bonds right now. So I think that's a massive part of it. I also think there's a subtle, in Bitcoin, we talk all the time, if this is the greatest wealth transfer in modern human history, what's the world going to look like with wealth being transferred to these new participants or constituents? Like if Manhattan real estate that's been passed down 5 generations is being demonetized and that new wealth is going into something like Bitcoin, who is the Bitcoiner? I think you're starting to see that, is that now we're at an asset class that's over $1 trillion. That's a lot of new money. And I do think that, money changes political opinions, right? These Muppets are purchased, they're bought out, they're controlled. So I think this is the first election too, where people could start writing big checks. I mean, like Brian Armstrong's got a lot of money. Michael Saylor's got a lot of money. This is $1 trillion of newfound wealth. And you're going to start to see the world be influenced by that wealth transfer. So this is also probably the first time that we're writing as big checks as Wall Street's writing, right? Like we're up there. So anyway, I think that's a subtle point. You're going to start to see the world be influenced by this new wealth. There's a lot of old asset classes that are being demonetized, and the world's going to look different with wealth held in new hands.
Mallers highlights the massive wealth transfer that Bitcoin represents. As traditional assets like Manhattan real estate are demonetized, new wealth is flowing into Bitcoin. This shift has the potential to influence political and economic power structures. With Bitcoin's market cap exceeding $1 trillion, its impact on global wealth distribution is becoming more pronounced. This newfound wealth among Bitcoin holders could lead to significant political and social changes, as these individuals and entities begin to exert influence. He concludes by noting the importance of recognizing Bitcoin's role in the future of finance. The approval of Bitcoin ETF by financial giants like BlackRock signifies a major endorsement and a turning point for the cryptocurrency. As banks and financial institutions embrace Bitcoin, its legitimacy and value proposition are further solidified. Mallers' insights provide a compelling case for Bitcoin's potential to revolutionize the financial system and serve as a hedge against economic instability. Please like and subscribe my channel.